This is a Stock Trading Reality Podcast, episode 15.
My business was down and it was, I was at a crossroads and I just knew that I had to reinvent myself, once again. And at 49 years old, it's not the greatest point in life to be reinventing oneself.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who once had his wife memorize ticker symbols for fun, Clay Trader.
I'm a little bummed out right now. I wanted to interview my wife and kind of quiz her again since it's been several years since we used to do that, but she's not home at this point in time. So somebody else fell into this trap, and this trap is our co-host, Ches. So Ches, are you ready to be quizzed?
I don't know. I don't think I can fill the void of your wife, but I can try to answer.
I'll tell you what. She looks a lot better than you do, okay?
I'm sure of that. There's no doubt about that.
I mean, to be honest, it's not even close. Like, I wish I could say, it's kind of a toss-up, but not even close.
No, it's a landslide, and I'm at the bottom of the slide. I'm at the bottom of the pile here.
We'll just leave that one alone. Anyways, so let me think here. This is all. We'll start off with the gimme. What's Apple?
AAPL.
Okay. What's Home Depot?
HD.
Okay. What's Best Buy?
Is it BBY or it's BBBY?
I need an answer.
I was so tempted to cheat right there. I'm gonna go with, I think it's BBY.
Correct.
There. I was right.
What is Bed Bath and Beyond?
BBBY.
Oh, there it is. Oh, that's the one I thought.
I can't believe I know this, to be honest with you. I guess I am a trader.
Let's see. What is GE?
I'm gonna go with G and E.
Well, there. Oh, I thought for sure I was gonna get you there. What about
G?
Pandora?
P.
Okay, let's. I gotta try to stump you. I'm trying to think of some ticker symbols. That Amazon.
AMZN. I know. Don't do any bios though. I don't know any bios.
What's another one that's okay? I guarantee you do not get this one for sure. I once asked IT Nate from episode 3. This one he did. This one's very complicated. What's eBay?
Oh, that's a tough one. I think it's going to be an E. There's a B in there somewhere, and a Y.
There you go.
Yeah, those 4 letters are combined somehow.
Well, I think you're unstumpable, so we'll just leave it at that. So well done. But yeah, back in the day, I got Abby, my wife. We just, whenever the market would close, we'd always just quiz, just kind of a fun little game. And I think she got up to like knowing 40, 50 of them. Okay, here's one. U.S. Steel.
X.
Oh, man. All right.
Got him.
You're good. You're good. Now, be honest. Did you cheat on that one? Was that Googled?
No, I didn't. I just remember that me and Gator were looking at U.S. Steel like months ago, and he wanted to short it right before it took a dump. So, yeah, I remember that one.
All right. Well played. Well played. Well, anyways, welcome to the show. We have a fantastic interview here, and we've already done it, but we are going to be talking with Steven today. He goes by PH in the chat room, so if you've seen him around, nice, valuable member of the community. Still somebody that's been on a long journey. He's been through all sorts of things, starting at the .com bubble, but is really now just finally kind of getting a little bit more active in his trading. So he gives us a very insightful, a very honest interview. And then there's some dynamics that we explore later on with kind of his support system at home, which I think is very fascinating. That's towards the end of the interview, so be sure you stick around for that. But let's hop in and start to talk with Steven. Well, hey, Steven, thank you for joining us.
Oh, thank you. It's an honor to be here.
I'm excited. We tried this once before, but then we had a few little technical difficulties, so we had to reschedule this. But here we are. So let's just hop right in. You shared quite a bit in email with us already, which I really appreciate. So obviously the listeners have no idea what you had to share. So let's just start at the beginning. So what you got you interested in the market? What were you kind of doing at that time? And then kind of we'll just see wherever the conversation takes us.
Sure. Yeah. Well, it's kind of a 3-prong answer. My first real interest started in college. And my senior year of college, I took an investments course. And so it was all about the stock market. And so that's really kind of where my interest began, even though it wasn't until years later that I actually got into the market. But that my first real experience and the market was back around like 1999, 2000, and it was the height of the internet bubble. And it was, a great time to be playing those technology stocks. And at the time, I had a job and I was, making good money. So I just started pumping a lot of money into those technology companies, who coincidentally were also at the time my clients. So I was in an industry where, although I wasn't in a technology company, my clients were all companies like Oracle, Cisco, Siebel Systems. So I'm watching, I'm working with these people, that work at these companies, and I'm seeing these stocks just skyrocketing. So that's when I jumped in and just started pumping all kinds of money into, maybe a handful, 6 or 7 companies and companies that I was working with at the time.
So how did that, were you late or were you still, let me ask it this way. Were you making money or losing money at this point in time?
Yeah. What time did you arrive to the party?
I arrived at the party like midway. So, it was, the party kicked off. I jumped in somewhere around the middle, and, I rode it all the way up, and then I rode it all the way down. And I made, big mistakes, like not taking profit when I should have taken profit. Now, in my defense, I'm not, pushing responsibility on somebody else. Ultimately, it was my bad. It was my responsibility. I should have done a better job at this, but I wasn't actually the one trading it at the time. I had a broker who was making trades on my behalf at my direction. So I was saying, here's the money, go buy this stock. Well, he never came back and said, you might want to consider selling at this point. You might want to consider, taking your profit. And, but as the market started to go down, I, of course, then made the biggest, mistake that people make. And I started averaging down. I figured, well, the stock went up, it's just a dip. It'll come back. So I just would pump more and more money into those stocks. And then, but they just kept declining.
Out of curiosity, I was not around during the .com bubble. I was still in high school. Could you have, did E-Trade, TD Ameritrade, did they exist at the time? Could you have done it yourself, or did you have to use a broker back then?
To be honest, I don't really remember. I think it was probably right about that time that the online brokers were becoming popular. I just, for me, I had a broker I was working with. And, to me, it just wasn't in the forefront of my mind to think about trading it myself.
And then to follow up on that, just out of curiosity again, so when you're averaging down, was your broker giving you like, hey, man, you might want to tap the brakes? Or is he just, what was your broker saying doing all of this?
Absolutely nothing. Taking my money, pocketing that commission, and just watching the stock go further down.
So he had no problem just saying, you want to buy more?
Sure,
no problem.
Why not? Go ahead. Buy more. Drink that Kool-Aid.
So he was kind of like the Kool-Aid man for you, just bursting through the wall.
He was the Kool-Aid man.
Did he like reaffirm your, oh yeah, that's probably a good decision to buy? Or was he just like, okay, yeah, well.
No, he wasn't really giving me any advice one way or the other. He was just taking the money and executing the trades and taking the commission.
So at any point during this process, did you think that you had things figured out? Did you have any fool's gold like, wow, I'm a trader. I got all this figured out. Or, did it all kind of happen too fast where you never even really got to that point where you actually thought?
I was sure that I was a genius. At one point, my guess is, I don't have the records to go back and look at it now, but I think at the height of, all this, probably my account value was somewhere around $250,000.
Very nice.
At its peak.
At its peak. At its peak was about 250, and I, of course, didn't take those profits.
Now, at this time, I know you had a broker to kind of execute your orders. Were you actually looking at charts yourself, or were you just kind of from a more fundamental standpoint, since you had worked with these companies, kind of choosing who to buy and kind of who to sell if he let you sell any at all?
I wasn't looking at a thing. That's the honest truth. I was working with high-level executives at these companies, senior level people, who were pumping their own stocks. So, I'm talking to, a senior level executive at Siebel Systems. I don't know if you guys remember that name, but, that was a big company at the time. And he's just talking up and pumping up the stock. And, meanwhile, I'm like, but why did you sell a bunch of your shares, last week? And, oh, no. I was just, I was forced to, take some, to execute some of those. I mean, it was just, it was, and they all said the same thing. I mean, like every time I question one of my contacts at one of these companies, they're like, no, don't worry about it. It's just a dip.
So when you went out to lunch with the CEO of Enron, I mean, what was his excuse to you?
He said, get the steak. That's what he said. He said, get the biggest steak you can get.
Yeah. And the lobster.
Yeah. So basically, fair to say that at this point in time, your quote unquote research was, hey, I'm talking to people, high up in the company, and I'm just going to go for just trust their word then. That was your research?
Yeah, I mean, my research was basically that I'm working with these companies, working very closely with them, and I'm watching that their stocks are, skyrocketing. I'm seeing what they're doing with their products and, just the hype that there was around everything. And that was it. There was no technical analysis. There wasn't any fundamental analysis. It was just looking at the stock prices move and jumping in.
All right. So you were at 250,000 at the peak. When did you eventually say, you know what, something's not right, I just got to get out? I mean, where was the account value range wise at that point in time?
Well, so that then goes into a couple years later because the stocks, they all went down. The portfolio went way down. And I eventually, at some point I did sell, and I think I pocketed like $6,000. But I was holding on to an awful lot of the portfolio at that time. And I thought, well, it'll come back. Just give it some time. This is just a hiccup. So I would say it was a few years later, I, was still sitting on, a pretty big loss, even though, it wasn't realized because I hadn't sold. So, now I have a new financial advisor.
That's probably a good idea. We're happy to hear that.
So anyway, a few years later, this new financial advisor, he recommended that I just dump the entire technology portfolio. That I just sell it off at a loss, and I then could carry that loss forward for however long it would take, to offset future gains. So ultimately, I think my loss, and Clay, I sent you that email just from my accountant, but I think that loss was somewhere around 160,000.
It was a big loss. I remember seeing that email, and my eyes got a little wider. I thought, all right, Stephen, he's been through some stuff here.
Yeah, and I'm not going to lie to you, it still hurts a little.
Hey, that's what is that? 6 digits. I mean, 6 digits. That's going to sting for a long while, I'd imagine.
Well,
especially going from green to red too.
It was not good. And again, I'm putting my trust in somebody who I think has my best interests, in mind, who is a, professional who has some designation after their name that says, they know more than I do. And so, I went ahead and against my better judgment, my instincts were telling me, hang on to it. And, but I did, against my better judgment, I did end up selling off that portfolio. And, of course, over time, they did come back. I mean, the kicker to all this is that one company I've mentioned a couple of times, Siebel Systems, like 5 months after I sold the stock in Siebel Systems, they were acquired by Oracle.
Oh.
And the stock went way up. And, and it was just, and it's just one story after that. I mean, to tell you, some of the companies that I dumped at the time were Oracle, Cisco, some of these companies that today are, doing very well. And, and he said, they're never coming back. So you're better off just dumping them.
So where did he redeploy your capital to? You're out of the technology now. Where is his brilliant idea to put your money then?
Oh, there was no brilliant idea. It was, I had since left the corporate world and went into business for myself. So, his thought was, well, you can then have some working capital for your business.
So he really didn't his redeployment was just, hey, hand it over to you, and then you make it happen with your business then.
Right. And there really wasn't much left.
Pretty much take what you have left and use it for your business. It's better
right.
off there. That's what his advice was.
Go on vacation.
Yeah, exactly. Now, what year? I mean, what kind of year are we looking at right now? Because I'm trying to construct, how long you've been on this journey. So you got back down around 2000 when you started. So is this around 2003, 2004?
Yeah, between 2003, 2005 was when I started selling off the portfolio. I didn't do it in one fell swoop. I did a little bit here, a little bit there. So I was doing it like in chunks of 30,000. Like, he would convince me to take a $30,000 loss. So I would. And then, 6 months later, 8 months later, he's like, look, it's not coming back. So it was just over a period of time, a couple of years, that I just started just selling it off until finally it was all gone.
All right. So let's just say you started to liquidate 2005. Is that when you started your business around there?
I actually got into my business in 2001.
Oh, okay.
So, yeah. So I was holding that portfolio during that time.
Okay. So as all this liquidation was going on, when did you finally kind of sever ties with it? Well, I'm assuming you're no longer with that financial advisor. Is that?
No, I'm not. No.
Okay. All right. So you finally reached the breaking point. You know what? We got to part ways. So where were you at kind of mentally then? I mean, were you still focused on your business, or what finally transitioned you into, all right, I want to kind of take things back in my own hands a little bit?
Yeah. So I at the time I was just really focused on my business, and it was doing really well. I was growing 20, 30% per year, and, and things were great. And, I didn't have time to even think about, doing trading or being in the market. I was just, I was busy growing a business and making money, and things were going great. And, that went on from, 2001 when I bought the business until 2008. And so it was, the collapse of the financial system that, really just my business at the time then just did a nosedive.
You've seen quite the set of cycles, haven't you, Steve?
Oh, up and down. It's like, it's even like right now, my trading, it's, up one day, down another day, up a day, so yeah, it's been, quite the roller coaster so far.
So 2008 happens, everything kind of goes down the toilet. You said business was not looking too good. Is that right?
Yeah. My business in a single year between, it's interesting. My business was, it was a little slow to take the hit, so the economy, I think, really started slowing down, let's say 2007. I'm just guessing, maybe it was 2006, but my business is really geared towards high net worth individuals. So my business continued through the initial slowdown because, people, again, probably thought, well, this is just a minor
buy the dip. Yeah,
exactly.
Buy the dip. Yep.
Right. So my business didn't get hit right away because my clients, again, were, high net worth individuals. So, but when it did, in 1 year, my revenues were cut in half.
Yeah, I was just going to say, once the crisis actually caught up to those high net worth folks, I'm sure that's when it took its toll on your company.
Yeah, and it was so fast. I mean, it just hit me, so quick, and like I said, just not even a gradual decline, just 50% cut in revenues.
So over 10 years, you had watched a big winner turn into a big loser, which you pocketed. And I'm Clay, you can agree or disagree with me. That financial advisor sounds like he did kind of had Steven sell at the worst point, kind of the trough. If you look at that graph, fear, hope, greed, and then it kind of goes into denial. And then he had him sell right at the bottom. It might not have been the very bottom. And obviously you said some of these companies rebounded and are very strong today. Do you think that's where his broker had him selling? Was that kind of the bottom of that trough there, kind of the worst point?
Yeah, I'd say the broker pretty much sold the bottom for you. It sounds like. I mean,
like a straight up psychology case for kind of trading. So I thought that was interesting when you kind of brought that up. So now the financial market has taken its turn, and now it's affecting your business. Revenues are cut in half. What are you doing from there? What are your thoughts at this time? Do you think like this is the end? We're going into a deep depression or something, or I want to hear your outlook at that time.
Yeah, well, I wasn't really sure. I mean, I just knew that. My business was down, and it was, I was at a crossroads, and I just knew that I had to reinvent myself, once again. And, and at 49 years old, it's not the greatest point in life to be reinventing oneself. And, and again, like, with the business, I mean, in 2008, when things started slowing down, I didn't close the business. I didn't shut it down until about a year ago. So during that time, so for 4 years, let's say almost 5 years, I was subsidizing the business with my own personal savings. So, the business was still generating revenue, but not enough to pay salaries, not enough to pay, overhead every month. So I was, constantly dipping into my own personal savings to fund the business.
So you were just you were slowly bleeding to death financially, at least at that point, is pretty much what was going on.
Yeah, I mean, I would, I don't know numbers, but I mean, I would say probably over the course of those few years when I was, taking money out of my own personal savings to fund that business, it was, probably another $200,000 over the course of, 4 or 5 years, something like that.
So you've been just funding it, just out of your back pocket. Eventually, okay, something's got to change here. Something, the business, you realize that things aren't going how they should really go from a business perspective. So is that what finally brought, hey, maybe I'll try the markets? Or, I mean, where were you at that point in time?
Yeah, well, so again, to use that 4-letter word that you love so much, I was holding on to hope for quite some time.
We don't cuss on this show, Stephen. So watch the language.
So I kept thinking, okay, well, again, things are going to come back. It was a viable business before. It will be viable again. It's just a matter of time. Well, that just wasn't the case. It just wasn't coming back. So I finally got to the point where I'm like, I have to find something else to do here. I need to reinvent myself. So it was back in like November, maybe of this past November. And I read an article, and I forget what magazine it was in, but it was about the guy that, I don't know if he calls himself this or if he somehow earned the title, the Wolf of Weed Street. And they were talking about, these penny stocks, these weed stocks. And what's interesting is even though the article started out talking about him, it then turned to this other guy who I won't use by name that, loves the whole Lamborghini angle and, the helicopter and, get rich overnight and, follow me and join my, my crew and all that. But I was looking at that and reading it, and I didn't buy into the hype of that, but I realized, hey, there's something there. And not necessarily the weed stock angle, but just in general, the markets. And the more and more I just started reading everything I could find, started looking at everything I could find on the internet, on YouTube, and just trying to get as educated about it, and not necessarily about trading itself, just about the concept, about the markets. And then my interest was just so peaked that eventually I'm like, this could be a viable option for me to moving forward.
So you came in, I think I know what article you may be talking about, but I think, were you you missed the marijuana stock boom, right? Were you?
Oh, completely. Yeah, no.
Okay.
I was way past that. Yeah.
Okay, because I'm pretty sure I remember that article, and that the reason for the article is because that guy pretty much just lucked out, timed it all up perfectly, and he was making environment. Well, you know how the bubbles work. I mean, anybody can make money, in a bubble.
Right.
So you read the article. You know what? So you're doing a bunch of free education in terms of YouTube, Google, and stuff. I mean,
yeah.
What sort of stuff was out there? I mean, what were you learning at that time? What were your thoughts on how trading worked?
Well, I was really at that time just really studying the penny stock market in general, and not really any one strategy or anything. Just trying to educate myself on the concept, on the overall market, and and of course, the more and more I studied, and learned, the more and more I realized it was just junk. And but I still knew that there was something valid about being in the markets, and so I just took that idea and I, just kept delving into everything I could find and read. And eventually I came across your videos. And so I started watching, the videos that you post, every day with, the different charts and talking about support, resistance. And so things just kind of developed and evolved. And then eventually I just figured, there's something here. This may be the opportunity for me that I'm looking for in terms of, all my needs and, with the ability to make money, not necessarily needing a large amount of money to get started. And so that's how I started getting into the markets this time.
Now, at that time, did you Now, did you kind of fund an account at that point and start putting on trades, or did you kind of, I know you had done your research and kind of tried to soak up as much, free information as you could. Were you putting on trades at that point, or did you kind of recognize, you're squaring off against professionals and you kind of need to work a little bit more on, your side of the trading?
No, I wasn't doing live trades. I wasn't putting on trades. I actually, so this is where I think kind of my approach to this is somewhat unique, is because I've been in business for myself for so long, I approached this entire concept and idea as a business venture. And so I wasn't about to jump into something without first becoming educated, developing the skills, everything I would need to be successful in this business. So I just started focusing on education. So I spent months and months just becoming educated, just, trying to learn as much as I could. And then, again, I found Clay. And what's interesting about, I started watching your videos. And then at some point I was like, you know what, maybe I'll buy just one video. And so I bought, I'm trying to remember, I think I bought the Penny Stock Survival Guide or something like that. And I remember this, I bought it on a Sunday and I watched the video, and, you had some promo where I could, like right away, you're like, well, since you bought this one, here's a discount on a second one if you want it. So I went ahead and bought the second one. Never even watched it. I just watched the first video. That was on a Sunday. The next day, Monday, was a holiday. It wasn't even a trading day. And then Tuesday morning, first thing, I jumped in, with both feet into CTU. And I remember I sent Clay an email and I said, I did this over the weekend. I should have just committed, full boat right away and just gone right into CTU. Would you credit me back, what I purchased over the weekend? And I give you credit for this. Your response was basically no, but it wasn't.
Well, you understand risk. I mean,
it wasn't a flat out no, but you were like, look, if I give you your money back, then it's not fair to all the other people who committed up front to CTU. So and I respected that, and you did end up giving me little bit of a discount. You gave me a little bit of a credit, but at that point, I just signed up for the full CTU.
Right, and just I appreciate you bringing that up. It's one of those things where, I mean, especially now, because Steven, he didn't have the podcast to listen to, so he had even less information. But at this point in time, I mean, look, it's a good business model. I understand what you're doing. I understand what other people are trying to do. And let me just buy a course. And then if I like it, okay, my risk has been alleviated. There's no risk. I know I like this guy. So now I'll see if I can go the rest of the way. Well, that's not fair to the people that say, I'm totally buying blind. I am making the ultimate leap of faith here in terms of risk, because who knows what's going on. So, that's why I do it the way I do it. Is
we're meeting people in the middle now, though. You guys, if you ever go to the website, you see that you can actually talk to me on the phone, and I'll talk to you about kind of courses and stuff. So we're trying to meet people in the middle. But yeah, like you said, those who buy blind really kind of get the most benefit, especially at that time.
And therefore they're going to get the best discount on price. If you're buying blind, taking the pure leap of faith, then you are going to get the best pricing. But Steven, it was a good risk versus reward. Best case, yeah, I'll refund you some money. Worst case, no, that's not going to happen. So you'd be stupid not to at least ask.
Well, and again, it was, it wasn't that much. I mean, it was only, a single course, and then I forget what the, extra was I paid for the second course. But, I like the fact that you said, no, it's not fair to everybody else who went all in right away.
Right. And I can't stand people out there that, they have their courses and they have all this stuff. And then, hey, we were running a deal for 60% off. What? If you really believe in your stuff, why are you discounting it 60%? That tells me right away, all right, your stuff is way overpriced. It's way overpriced, and that's why you're willing to run these 50%, 60% sales. It's such a joke, and it's one of my pet peeves. Is just, can people not see that person clearly doesn't believe in their product if they're going to cut it by 60%? But that's a whole nother conversation. But right. I do remember all that because you bought the course. And then it was like a few days later, and you're like, all right, I'm ready to go. I'm like, wow, he knocked out that course real fast. So
no, I watched one.
Oh, you watched one video within
I only watched, I didn't even get through the whole course. I watched I don't know, a couple of the sections of the course. And I was like, I'm just going all in.
Wow. Well, I always thought up until this point it was the course you got through, but wow, you made that decision after a few videos. Well, hey, if you would have told me that, I would have given you the refund back.
Well, and the reason I pointed out that it was that Monday wasn't even a trading day, so it's not like, because I was also then in the inner circle, so it's not even like I had any benefit from a single day of trading with this. I just was like, but I looked at like, this is the cost of doing business. It's the cost of education, and I'm not going to get into a business without properly educating myself, and sometimes you have to spend money in order to make that happen.
What I want to stress to our listeners here is that Stephen not only recognized that he needed to kind of get educated about the environment he's about to start doing business in, he had a plan. So that's the thing, is a lot of people just don't have a plan. So, we always talk about trading plans and a lot of stuff like that, but he had a business plan for how he wanted to approach this, and that's so key. He didn't just say, I'm just going to be a trader today and just fund an account and go do it. He had a plan. He kind of took the steps through it. Now, he kind of went through the steps pretty quickly, but he still had a plan and he followed through with it. So that's just something I wanted to stress for you guys.
No, that's a good point. And out of curiosity, you said back in college that you took an investments course. What did you take away from that investments course? I mean, did they teach anything compared to the penny stock survival guide? I mean, how did that compare to what you that investments class back in college?
It was actually a really comprehensive course. There was a connection with the Wall Street Journal. I forget exactly, because I was actually up for the Wall Street Journal award, from that class, and didn't get it. A friend of mine ended up getting the award, but it was really comprehensive. I mean, they covered everything from trading stocks to options. I mean, so not that I remembered all of it, those so many years later, but it really was a very comprehensive course at the time.
Now, what about in regard? I mean, did you know what supports and resistance levels were and stuff like that after the course?
Absolutely not. No.
Okay, so they taught investing, they taught general financial principles, but as far as I mean, could you have taken that class, opened up a brokerage account, and started trading for consistent profits?
No.
Okay, so
absolutely not. No, it was more kind of the high level, just
right,
or
typical
basic
college
understanding of the markets, and
here's a PE ratio, and here's the underlying cash and stuff like that. Yeah.
Right. So, all right. So you join CTU, and you just start going through courses. I mean, so where did you go from there?
I just was just studying all the courses, and I think I've gone through, the penny stock survival guide was great, but it's really when you get into like robotic trading and RVR and those courses that you really get a real good understanding of these support resistance and managing the trades and managing risk and all that. So I just literally kept studying these courses over and over and over again, and I sat in every day on the inner circle, the chat room, and just took it all in. And I never typed a single thing into the chat room. I just kept soaking it in. I got an account with Thinkorswim, and so I'm using the TOS platform, which I have found very helpful. I don't know if I would stick with it just because the commissions are so high, but just in general, becoming familiar with the process and the platform, studying your courses, understanding things like support resistance and all that. So I just did that for months without doing a single trade. And go ahead.
I was just going to ask. So just broad sense, what month did you join CTU?
So I want to say I joined CTU. I want to say that was January.
January of 14?
January of what year were we in?
15.
2015. Yeah, 2015.
Okay, and then let me just ask, when did you make your first trade with real money?
Probably in March or April.
We'll just go with, all right. So you spent literally, we'll just take the lower end, 3 months at least just studying, working hard, and just going through educational things.
Yeah, and I would say I probably, and I still do, I probably put in somewhere near like 10 hours a week. Just and I just keep going back over things. I mean, I think I had commented or sent you an email that, just even driving, I'll just play the courses, even though I can't see, the screen, but just listening to it over and over and over again, just helps to,
right. You're brainwashing yourself in a good way.
Absolutely. I know what you're going to say before you say it, Clay.
Good. That's the goal, as you know. That is the goal. So, I mean, that for listeners, a lot of people, I see it all the time. I understand it. I understand trading is fun, but, learning on the job, that's great if you want to be a carpenter or, a plumber or, I guess even in medical school when you do your residencies, yeah, you can learn on the job and get paid. It doesn't really work like that in trading. If you're trying to trade with real money as you're going through the, learning process, don't get me wrong. That's great that you're trying to learn. That's fantastic. But trying to learn using real money and then experimenting, it just, it's trust me, take my word for it. It's not going to turn out. So that's awesome, Stephen, that, you've actually gone through that process just studying, not studying and trying to learn on the job. Were you paper trading during that 3 months too?
I was paper trading with the Thinkorswim platform, and my feelings on paper trading are kind of mixed. It was for me, it was great because it helped me to learn the platform and how to actually put on and take off trades and all that, like and learning about things like where to put just how to execute things, buy, sell, stop losses, all that. And also just become familiar with timing and things like that. But there's nothing like putting on a real trade. And, the one thing that I, don't like about the paper trading is that, it can build a false sense of confidence. And because you're not playing with real money. So, okay, well, you take a loss here, or you jump in and you do something that, if it was real money, you wouldn't do. And so it's really hard, I think, to be disciplined when you're paper trading and to try to make it as real as possible. Because once you actually put real money on the line, it's a whole different ballgame.
Yeah, once you have your dollars on the line, those voices just come out of left field and they're screaming at you, especially right when you start. But yeah, we do always press, you've done such a good job though in, learning to use the platform, especially because we have people all the time who say, I accidentally closed my position, and I still made money, but I could have made 4 times more money. And, those are just user errors on, their platforms. I'm not calling out anybody specifically, but, you're comfortable with kind of entering an order, knowing how to close it if you have to. But at the same time, I think, paper trading is really meant to, you can't really combat the psychology when you're paper trading. But what you can do is you can kind of figure out strategies and kind of, your technique. And that's so important to do. And, if you're not doing that paper trading, you're doing it with real money. And then you start style jumping and now you're a breakout trader and now you're a pullback trader. And, you don't really find what works for your comfort level. So yeah, there's definitely kind of pros and cons though for doing that. But so you did the paper trading. Now you put on your live trades. What's happening now?
So when I finally did jump in and started doing live trades, again, I didn't have a real strategy. I mean, I thought I did, but I quickly, realized that I didn't. Like I would, get into the live trades. I would, I would make some money. I would then lose money, and so I was up and down. I wasn't consistent. I was making, all the rookie mistakes that newbies make in terms of not honoring stop losses. Averaging down, which you'd think I would have learned from my, internet bubble days, things like that. And so I was, I would have some big winners. I would have some equally big losers. So it was just, up and down. And, the one thing with me and how I approach this is this is a real business. So when I was about to say, if this was a real business, but it is, I wouldn't continue doing things. I wouldn't continue throwing good money after bad and making the same mistakes. So I took a step back and I realized, I don't have a solid strategy right now, and I'm not ready to be doing this, with live trading because, again, just the fluctuation and having as many losers as I did winners and really not coming out ahead, or I just decided it was time to take a step back. So I did. I stopped live trading, And I literally went back to just studying and educating myself and relearning everything that I had, thought I had learned the first time. And then I started picking up on things that maybe I didn't remember, or I, didn't conceptually understand as well as I should have previously. So I probably went back to educating myself without live trading for at least another month and a half, maybe 2 months.
And where are you standing right now? Are you still studying, or are you back to trading?
I've just gotten back into the live trading, just in the last few weeks.
And are you doing options or stocks? What sort of vehicles are you using?
Well, I am doing stocks, but where I'm really moving to is options, without a doubt. I mean, I quickly, that's the other thing I've realized. I've quickly realized that the best place to be doing this is the options market, and just to be able to control the risk much better, to be able to play bigger stocks that will actually move, and to do it with little money. It's, I know that's your approach, that, between, if you have to pick between options and, trading penny stocks, well, it's a no brainer. You can trade pennies, but with, companies like Tesla and Amazon and, all the other big companies.
Yeah, people fail to realize, everybody thinks price action is, price, that's the only thing that matters. Well, technically speaking, a stock can go from $1 to $10 in the blink of an eye. But the behind the scenes part is, well, if there's no volume up there for anybody that wants to buy it from you up at $10, is the price really up there? So yeah, you got to have volume. In other words, liquidity. And yeah, that's like Steven said, Amazon, Tesla, Apple, they all have penny stocks attached to them, but they're not called Apple penny stocks. They're called Apple options. So, that's a great way to go with that. So, how's the trading been going for the past few weeks? Are you doing better in terms of those newbie mistakes, or you're not averaging down or anything like that, are you?
No, I'm doing much better. I'm being very conservative. Because before, when I first got into live trading, I was jumping in with, big orders like, 1,000 shares, 2,000 shares, and and I had no business doing that. And so now, I'll go in 500 shares. So I'm just taking a much more conservative approach to make sure that I am doing everything the way it should be done. And so I'm more focused on, I absolutely honor stop losses. I don't move them at all. If I take a loss, I take a loss. If it goes my way, great. I try not to look at, when I'm in a trade, I try not to look at the actual, dollar amount that's up there on the screen. I just try to focus on the candles, try to focus on the trade itself, managing the trade. And, sometimes, like a few weeks ago, I think Ches was the one who, commented on, I perfectly executed a short trade, ended up losing $5. And it was the greatest feeling, because I knew, once it was over, that I did it exactly the way it should have been done. I quickly moved my stop to break even. And then I started, when I did, that's when, it came back against me. But from the point that I entered up until I got, stopped out, it was a perfect trade.
And you managed it well.
Yeah. And I was happy with that. Look, if I can take a $5 loss, but know that I managed that trade perfectly, that's all I need.
Right. All you needed to happen was for the price to actually go in your direction, and who knows how much you would have made. You knew what you're going to lose. You're going to lose $5, but that's that. And that's, as traders, that's what we're always trying to do. We want to put ourselves in the position where we're saying, the biggest worry on my mind right now is, do I lose $5, or am I going to make? Well, I don't know how much I'm going to make, because the price could just theoretically continue to go in my direction. So, and that's the big misconception that gets people crushed out there is, if you just told somebody, yeah, I took a $5 loss, they'd be like, oh, well, that was a failed trade. No, you can't look at it as the trade. You have to look at it as, how did you manage the trade? But just to go back to a point about you hopping in with 1,000 shares, 2,000 shares, there's a video that I did talking about the dentist chair test, and how you could have the best intentions at heart. You could have the best trade plan, set up. But if you have too much size if you're using too much of your capital, everything's going to go out the window because you're mentally freak yourself out. So I'll link that video in the show notes. But is that kind of what you think maybe was happening there, Stephen? Was because your size was too big, all that education you had, you just mentally freaked yourself out?
I don't know if it was that. I mean, it's funny that you asked that question because I honestly, I think it's, the old saying, ignorance is bliss. Like, I jumped into it not knowing, so I didn't know any better. It could have been 10,000 shares. It didn't make me uncomfortable at all. I was just jumping in and just putting on these trades. But when I took a step back and I'm like, okay, this isn't working out the way I expected it. And then so when I got back in now, I'm like, look, I want to make sure that I'm doing this all exactly as it should be done. And I'm going to, not risk, by putting in, 1,000 share order. I'm going to do 500 or depending on the price of the stock, 250, whatever it is, I'm keeping it small so that I can better manage risk. So, even if I'm setting a tight stop loss, whether it's, a hard stop or a mental stop, but still at 500, it's going to be a lot less than if I'm trading 1,000 shares.
I love this. And I just cut off Ches again, but I love how you're not sitting here at all talking about winners. All I keep hearing from you is risk, manage risk, got to know my risk. I mean, Ches, you got a tissue. I might start tearing up over here. This is just,
yeah.
This is, I mean, I understand it's probably not the most exciting conversation because let's talk about our huge winners, but that's not what trading's about. It's all about that risk management. So, Ches, I apologize for my adrenaline gets flowing. Ches, I can't help myself. I just start being rude and cutting people off, but I know you had a question.
I did, but yeah, it's such a key thing for traders to realize, especially people who are not trading yet and just kind of listening to the podcast, is that being a trader is mainly about being process oriented, having good habits. You hear how Stephen's saying, he wants to ensure that he's got his stop loss in place and he's managing his risk. He has no idea how far a stock might go in his favor. And we're not, we're not Miss Cleo. We don't have a magic, orb that we can look into and see where it's going. But what he understands is that he's going to build good habits. He's knowing that, not only has he sized down, if he develops good habits with 500 shares, it's totally feasible that at some point, as he gets better and more confident, he could still be managing his risk with 5,000 shares. The important thing is he's doing it small now. He's making sure that he's got these good habits and things that are going to keep him in the game for the long term. Working on them now and making them become second nature, and you don't even think about it because you can't be making those rookie mistakes and averaging down and doubling up and adding to losers when you're trading 5,000 shares. So get rid of those habits now. Work on the good ones, and then like I said, the moon is the limit.
Well, and I'll give you an example. Clay, you've got that one video that is I forget the exact title, but it is day trading or stock trading gambling.
Oh yeah, yep.
Right, which I think is a great video. And when I look back at what I'm doing now versus like when I had my business, and as I mentioned, between 2008 and until I closed it in 2014, I just kept pumping money into it to keep the business going. I mean, talk about not having any risk management in place. I mean, just sitting there hoping that a new client was going to come in, that I was going to get that my revenues were going to increase. There was no plan. I mean, there was no strategy. There was no plan. There was just keep throwing money at a business only because it had been successful for many, many years before. And, but you look at what I'm doing now. I mean, now I can control that risk. I know that I'm going to spend that the cost of executing this trade, if it doesn't go my way, is going to be X. And I didn't have that with a business that had walls and a roof and a door. I mean, that was just basically just keep pumping money into it and hope that it was going to come back.
Yeah, that's awesome. And like we've said before, you think about all the stuff, all the factors that go into the market. The only thing that you can control as a trader, the only thing is how much are you going to lose. You don't know how much you're going to make. That's a good problem to have because if you let your position work for you, who knows how much you're going to make. But that's the only thing that you can control as a trader. And the only thing you control in the markets is, well, how much am I willing to risk? How much am I willing to lose? So it sounds like you've corrected a lot of those former weaknesses into strengths. I mean, do you feel any other weaknesses out there that maybe you're still struggling with?
Yeah, I think the the weaknesses that I still need to work on are, if anything, I would say that during that time that I was trading with the larger, amounts of 1,000 shares and all, I think that if anything, it may have rattled my confidence a little bit because, here I was doing what I thought was, the way to do it. And then I would still have losses. And so then, you start to doubt, well, do I really, do I know enough to be doing this? Do I have the skills yet to be doing this? And then taking the time off and then, going back and kind of starting from step one and going through the process all over again. Now that I've gotten back into it, I find I sometimes have a tendency to hesitate. And I think that that's just a result from, my previous experience. But right now, like I'll hesitate and I'll watch a screen and I'm really good at identifying support resistance levels and, pinpointing entry points and exit points. But sometimes I'll hesitate and I won't jump in when I should. And I just watch the stock do exactly what I thought it was going to do. And I'm like,
the balloon float away.
Yeah, watch that
there goes another
away.
trade. I mean that just happened to me yesterday. I forget one of those stocks yesterday that it was down. It was and I went to jump in and I had my finger and I'm like, I forget what it was, 14.20, whatever the price was. And I didn't hit it. And sure enough, the stock hit 14.20 and then it jumped up like 30, 40 cents in a single candle. It was like, okay, all right.
And that's, the whole looking for confirmation is a totally human kind of psychology thing, especially after you kind of took a beating there. Your brain wants you to be right, but you want to wait a little bit more to make sure that you're right. And what's honestly happening is you're taking on more risk. And we cover stuff like that in the courses. But so yeah, that's a totally normal thing to do, especially after kind of having a rough start. But honestly, having a rough start, in my opinion, is still better than just kind of coming into fool's gold, because usually it hurts a lot more to have a bunch of money and then lose it because you didn't really know how you made it in the first place. But I want to talk about kind of support systems here. So what type of family support, or do you have friends that kind of, what did they think when they found out that you were going to kind of get into trading? Were they, supportive of it, or were they kind of against it? We usually hear mixed stories about this.
Well, I'm kind of in the closet with it right now. And, but I guess after my, friends and family listen to the podcast, that won't be the case anymore. So, I really haven't been sharing this with people, and for a very specific reason. So I don't have, I know Clay's really big on, you got to have the support of your family and of your spouse. Quite frankly, my support that I've had thus far has been inner circle. And so that's where I find the support I need, because like I said, I've been keeping this to myself.
So nobody knows that you're trading right now?
Well, my wife does now.
As if because she's listened to this, she knows now?
No, we've had a conversation.
Okay.
We finally had a conversation about. No, so it's interesting because she was like watching me, because as I mentioned, I was studying. I was every night she would come home from work and I'm sitting there in front of the computer and she's like, "What are you doing? What are you looking at?" I'm like, just some things about the stock market, just trying to become educated on. I'm like really intrigued by this, and so I'm just learning, just acquiring some knowledge.
Okay, so does she know that you're using real money? I feel like we just turned this into Dateline NBC here all of a sudden.
She does now. Yeah, she knows.
Wait, now being because she's listened to this, or
because she's behind the door behind him right now, listening to him record this. That's why.
All right, I don't want Steven's wife to show up at my doorstep and break my kneecaps with a baseball bat. So
we had recently we had a conversation where I basically I told her everything. Again, she had a sense, she had a feeling of what I was doing, because she would see me, every single night or on the weekends. I mean, any chance that I got to study, I was studying. And so she would say, you seem like you're up to something. What are you doing? And and I would just blow it off, and I would just say, well, I'm just reading up or watching a video on something that interests me. So recently we had the conversation, and I told her everything. Now, what I should mention is the reason that it's been such a cloak and dagger thing all this time is that my wife actually is a senior level compliance officer for a major financial institution. So as far as she's concerned, I've gone to the dark side.
The dark side.
You're one of those evil trader folks, aren't you?
So it's, because she sees with her job in compliance, she sees this, day in and day out, people just blowing up accounts. There's lawsuits, against firms for, or against brokers or online, brokerage companies. So she's on that, she's the police on the other side of this. And so, she has her definite opinions and very strong feelings about day trading.
And I mean, in her defense, I would probably be the same way if every single day I was faced with just the kind of the valleys of everything. I mean, just when you're the police, you're not, nobody calls the police, "Hey, cops, I'm having a great day. Why don't you come on over and let's share a drink?" No, if you're calling the cops, that's something probably not very good is going on. So I do totally understand where she's coming from, because I can totally understand when you're surrounded by that day in and day out, that's probably a rough situation. So have you guys come to like a middle ground, or, I mean, where does that kind of stand?
We're working on it.
Working on it.
Yeah.
Fair enough. I am by no means Dr. Phil, so I'm not going to, try to push that, but, that's good. At least you are working on it. So it's a process in motion right now.
Well, and it's not just that, the struggle between us and our different views on this. And I'll back up for a second. I actually did have her, at one point, she was like just all over me about how, this is no better than gambling, and telling me, all the accounts that she sees that, get blown up on a daily basis, people that, are attempting to do this, but clearly not doing it well, and not, looking at things like, managing, losses and all that. So I had her, I forwarded her like maybe 3 or 4 of your videos, the ones that you put up on YouTube. And I said, just do me a favor, and they're short. They're 3, 4, 5 minutes. Just watch them. Just watch them and see if you think that this guy is a little different than, everybody else out there who you're, thinking about when you're making comments about day trading.
I'm nervous right now, man. I don't know if I want to hear the results.
And she said, she came back, she goes, "Okay, I got to be honest. I like the guy's approach." She's like, he's not, he's not beating his chest saying, "Look at me, I'm a gazillionaire. I drive a, exotic sports car. I have, my private helicopter or plane." She's like, I can respect the fact that he's not talking about getting rich overnight, that this is a process, that it, takes time, that it can take years, that, so she's like, okay, he's different from, the people that gave me the impression of, anybody out there, whether you want to call them gurus or teachers, anybody that's out there selling systems or education, a lot of it is just built around hype. And look at all the money that you can make overnight. And it doesn't happen. It's not real.
Yeah, look at all this money you can make overnight. And I have this course that's going to teach you how to do it, but I'm going to mark it down 60%. But exactly. I mean, it works, but I'm going to mark it down 60% just for you.
Yeah,
I mean,
guaranteed profits.
Yeah, it's, the business model out there of get rich overnight, fancy cars, fancy houses, beautiful women, all that. And then they're marking down their courses. But one-time offer of, I mean, you've seen the infomercials at night. That's just pie in the sky. So, I was a little nervous. I'm like, uh-oh, is Steven's wife just going to come crashing down on me? But also
No.
what I teach and what our environment around, the inner circle is it's hard to blow up an account if you're managing risk. It's virtually impossible. You can't blow it up if you have risk at the forefront of your thoughts. So, I mean, it sounds like that. And she understands that. Like, okay, if this person is, go ahead.
Yeah. I was because, we still have a difference on opinion on things. Like, I started, she's like, well, look, you can still lose money, even if you put things in place like a stop loss. The stock can go through your stop. I'm like, yes, of course. But, there's also, ways to, trigger your stop at a certain point and have, give yourself a 10-cent cushion if you need to. I mean, there are things that you can do to mitigate, the possibility of just, the stock just falling through the floor on you. Now, then I said to her, I'm like, but listen to what he has to say about options. And, because again, she's like, well, what do you mean you can manage, you can completely have control over how much money you put at risk? I'm like, options. Listen to what he has to say about options. And, so we got through that and I'm like, look, I can do options and I'll know upfront, worst case scenario, I'm going to lose X number of dollars. And as long as that's an amount that I'm okay with, then that's the cost of finding out whether or not that trade will go my direction.
No, that's awesome. Are you only doing day trading or are you trying to do swing trading?
I'm looking at both. I've been day trading and I am also really interested in doing some swing trading as well, especially with the options. Yeah, I
mean, given your CTU, check out the advanced options course that at the time of this recording was just released.
I saw that today.
And have your wife watch it too, because she'll appreciate how you can leverage things to know your risk up front, but then also leverage other things to help create profits. As far as who cares what the stock price does? The passage of time with certain option strategies can actually help you, and you'll also know your risk up front there too. So definitely get into that, especially the way you're talking. You're so risk focused. You just want to be able to know how much risk you have going in. So I'm going to assign you on the podcast a homework assignment, Stephen. You got to get on those advanced option videos. Deal?
Well, I saw that you announced it today, so I was going to start watching them tonight.
Okay, so we have a deal. Chaz is here to witness, and all our listeners. Deal?
We have a deal.
Excellent. Well, I wish we could keep talking, but we got to try to keep these around an hour. But I do want to ask you, the kind of our first fun little question. Chaz has a time machine that he keeps underneath his couch cushions. If he lent that to you, and you could go back in time, way back in 2000, the internet bubble, and had a conversation with yourself, how would that conversation kind of go advice-wise?
I would say don't think that just because somebody has some type of a designation after their name that they know more than you. And don't believe that somebody else other than you has your best interest in mind.
That was that top 5 favorite quote right there. Don't just because somebody has a designation behind their name, don't believe that they know more than you. That's a great quote.
Yeah.
Chaz, what do you think about that? That just gave me some goosebumps over here.
It does give me goosebumps because honestly, he nailed it. You're the only person who's got your best interest in mind, no matter what everybody tries to say and sell. But so another good question we always usually ask folks is, what personality qualities or traits do you think has been kind of the backbone of trading in general, and probably more so yourself? What has really kind of been the rock behind your mental state for all of this?
Now, okay, so my question is this the question that used to be the 3 words?
No, that's totally separate. No,
that's a different one. Don't worry.
Oh, okay, all right, okay, that's a separate one. All right, so I'm sorry. Then repeat the question.
It was what personality what personality trait or quality do you think has been kind of the most beneficial and really kind of kept you interested in trading and gotten you to pretty much from way back when all the way through the dark times up till now? What do you think that would be?
I think it's just persistence. I think it's persistence and being able, especially now, being able to look at things like losses and again keeping them small, but being able to look at them as the cost of doing business, because that's what this is. We're all in business for ourselves, and every day we're up against everybody else out there who's trying to take our money. And so, you just got to be, to me, you just got to be persistent and trust yourself and treat it as business and take your losses in stride. And just look at them as the cost of doing business.
So you have to be very business-like, is I think what you're saying there.
I think that's what I said, but in a lot of words.
A lot of words is a good time. All right, well, really, I don't care about anything you said up until this point. I just do these so I can ask people these fun questions. So let's hop into the fun questions right here. The most important question: what is your favorite movie?
I knew this was coming, so I'm not going to tell you. You're going to tell me.
Okay. Oh, I like this. Let's go. Bring it.
So you're telling me there's a chance
No, come on. That's too easy. Give me another one. That's Dumb and Dumber. And for
No,
some context,
I know.
what
I
are the
know
chances of a girl like you and a boy like me getting together? Not good.
Yeah,
Not good like one of, yeah, you get the, yeah. So you got
I know
anything
you've
else?
got Dumb and Dumber locked up. No,
Oh, yeah. You
look,
can't stump me on that one.
Dumb and Dumber is a great comedy. I'm kind of I'm a bit of a history buff, and
Nice.
so kind of my favorite movies. Not that they have to be true to history, but like for instance, Saving Private Ryan, Gladiator, Braveheart. Like I love those types of movies.
Yeah, no, Braveheart is my favorite movie of all. Dumb and Dumber, of course, being my favorite comedy. But yeah, Braveheart's, let's see how well you know it. And Nate and I were actually talking.
I'm going to tell you right now, I'm not good at reciting lines from movies.
Okay, no. If you don't know this line, then you're not a true Braveheart fan. So at the very end, he yells something out. What does he yell?
Oh, when he's being stretched out.
Yeah,
Freedom.
there we go.
Freedom.
Yeah, exactly. Me and Nate were talking. Nate, the IT guy from episode 3, if you're interested, a little quick plug there. But there's a trivia question that came up for that one. And the guy picked Scotland that he yelled. So it would have been Scotland, which makes no sense. So, but
Well,
good.
it's better than yelling England.
Yeah, that's true. Good point. Good point. What about your favorite meal? What kind of food do you like to chew on?
I love, and I think I'm the first one. I think because I haven't heard the last couple that you podcasts that you haven't released, but I'm a huge sushi fan. Love sushi.
That's
Yep,
good
you
stuff.
are our first. Yeah, you are our first sushi fan.
I could eat it every night of the week.
Awesome. Now, what type of song or band do you find yourself listening to quite frequently?
Number one band all time, Tom Petty and the Heartbreakers.
Oh, nice. Seeing you on webcam right now, and I mean, you're wearing that Miley Cyrus T-shirt, so I thought that was going to be a huge shows, but I guess maybe you just ran out of clothes, or you borrowed something out of your wife's closet. I don't know, but
No, this belongs to my daughter.
oh, gotcha. I was wondering why I was so tight on you. That makes a little bit more sense right now. So, where would you like to visit someday if you could go anywhere you would want?
Interesting. I've been fortunate that I have traveled lots of places in Europe. I would say the one place I would love to go see is maybe Australia. Spend a few weeks there.
Yeah, I was trying to plan a motorcycle trip across Australia, but that'll have to wait until sometime in the future. Now, what do you do for hobbies kind of outside of trading and the rest of the work you're always doing?
Well, I've always been really into fitness, keeping in shape. So I go to the gym 5 days a week. I've ran two New York City marathons in the
Nice.
past, and then I play in an organized touch football league in the fall.
Now, I'm not trying to make this creepy or awkward or anything, but earlier you mentioned that at the time you were 49.
Yeah.
But I think that was like a few years ago within the context of the story. So how old are you right now?
No. I'm
Range-wise.
49 now.
Okay. Well, regardless, you look pretty good for your age, so I can tell that you spent some time at the gym. So, I thought you were like my age, which is like low 30s. So I'm like, all right, we got a 30-year-old. This should be real good. But
Yeah, no, 49. I don't know if I did send you. Look, I know you get a ton of emails, but I sent you an email once saying, look, if you ever want to, because I know that I've seen the pictures of your gym and all that, and I know that you're into keeping in shape, and so
I'm getting back into it. Yeah, I fell into a little. I didn't put a stop loss in. I'll put it that way. So
And he loves to deadlift. Clay loves deadlifts and anything that has to do with
it's
leg
so much
workouts.
fun.
deadlifts and squats.
But what were you saying? No, because to be honest, I don't remember this email.
Oh no,
so
but
please
I
share.
sent you an email at one point saying, look, you were giving me some stock advice. I said, look, if there's ever any advice I can give you on on diet, on fitness, and all that, because I've been doing it all my life. In my early years, I competed in bodybuilding, so I've been really into this for a long time. So I made that offer to you, which you politely didn't respond to.
And I honestly did not remember it until this point, but I know you now, so you may regret that decision. So
Hey, look,
but-
you've helped me with the whole stock thing. I'm happy to help you out with anything I can do in terms of health and fitness.
Awesome. Well, that's the great thing about this. You meet so many different people from different aspects. And yeah. Anyways, if you could meet one person, dead or alive, and hang out with them for a day, who would that be?
I've been thinking about this question for some time, and I could not come up with a really good answer. And I don't know why the one name that keeps coming back to me is Genghis Khan.
He was a businessman. If you want to talk about a businessman, he ran a good business over there.
Serious businessman.
That's a great answer. I like that.
Now, this is the question you were preparing for earlier. Now, what 3 words do you believe are associated with successful traders?
All right. And again, giving this some thought. So, one, I think a lot of people have mentioned discipline. You got to be disciplined. The other one, and I've touched on this as being part of one of my weaknesses that I'm working on, but is confidence. And you got to go into it being confident. You can't hesitate. You can't, you can't go into it with any fear. And I know Clay's saying no emotions, which is true. But, the worst thing you could do is have fear when you're executing a trade and let those emotions come into play. And then the last one, I don't know if anybody has mentioned this one, is self-awareness. And kind of what I mean by self-awareness is being able to take a step back and look at yourself and take responsibility and know that, if win or lose, you only have yourself to blame. And you can't blame the market. You can't blame somebody else. It's all on you.
I like that. A man who takes responsibility. There's no pure thing than that. So that's fantastic. Well, hey man, I'm glad we got this set up. I'm glad we did this. I appreciate you stopping by and hanging out. This was a good time. And given where you are in your journey, we'll definitely have to do a follow-up sometime down the line and touch base with you again and see kind of where your status is at. I like your honesty. Yeah, I started, I stopped, and now I'm just starting back up again. So, but you made the deal. You got some homework to do with those advanced option strategies.
Oh, absolutely. So. I'm going to get right on that.
Great. And so thank you again. And I appreciate you hanging out.
Well, look, thank you. Again, it was my honor to, be able to be on the podcast. When we first started talking about it, I was thinking, well, what do I really have to offer as a newbie? But then when I took a step back and thought about all my business experience and how I am approaching this, I thought, well, if anything else, maybe I could help out some other, newbies, or maybe there's some experienced traders who just don't have that mentality about approaching it, in terms of the business. So,
that was fantastic. And I've been, this is, episode number 15 at this point, and I've gotten emails and all sorts of things. You have helped people out. You will help people out when this airs. Because a lot of people can relate this sort of stuff. So thank you again. And if you did enjoy today's episode, would like to quickly request a few things. If you're listening to this on iTunes, leave us a review. Ches and I love to hear feedback and just get your thoughts on what we're doing well, what we can maybe improve on. So let us know there. Or if you're watching this on the website, claytrader.com, again, leave leave your comments, leave your anything that you have. We like to hear from you. And click that share button. Those little things go a long way. So thank you for hanging out with us. Thank you for spending time. Hopefully you got something from the episode. I'm sure you did. And we will see you back for episode 16.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.